Hello and welcome to the live trading hour, which is brought to you by the Live Trade Room, where we scour the markets as we approach the US trading session, where we got some cash coming into this environment, and we'll see where that cash goes. So we look for some high probability trading opportunities. Just looking across these markets, there's a little bit of inactivity. We were looking like we were going to get some momentum drives over the course of the European session, and they've kind of faded away. Will that, as we close out the week now, will that direction and momentum reassert itself? Bit of a question mark over it. Don't know how long this video is going to be today. So what we don't really want to do is spend hours in front of a screen if there's perhaps no point to it, and we're closing out the week. We don't have any sort of we got a bit of an inflation data event coming out, but is that likely to react or to move markets? Probably not, if you bear in mind what we've seen from the Fed, which is talk about taper and concern about inflation, and the reality of what they actually do about that is precisely nothing. So these markets are currently trying to work all of this out. So let's get straight into it then. Please see our risk warning currently up on screen, and obviously just be mindful of the risks involved in trading these financial markets. So we'll see where the opportunities lie nonetheless, irrespective of some of these news, sort of the recent news events. So as we scroll through the week, we had a really positive consumer confidence number. So confidence in the US from consumers is really positive. We had the FOMC on Wednesday, keep rates lower for longer, in no major rush to increase rates, with their forward guidance looking at 2 rate increases between now and the end of 2023. Concerns on the inflation side, it looks like they're going to overshoot their inflation target. They insist it's transitory, there's nothing structural here, and they have concerns. I suppose what's suppressing things like the bond markets is kind of supply chain based issues and the labor market as well. So all of these things are feeding into sort of a mixed market condition, let's say. So we were hoping to get some clarity on the GDP figure, and we saw a significant miss, and the stock market started pushing higher off the back of it. Again, it's a bit counterintuitive because, but apparently by all accounts, this figure here, 6.5, doesn't take into account certain, I suppose, sections of the overall GDP figure. So actually, it's not as bad as it looks, but still, this is stellar performance. But we were expecting a much greater performance. And unemployment claimants figures have ticked higher as well, about 18,000 unemployment claims higher. So actually, this is why these market conditions are a little bit mixed, and we've got inflation type data due out at 1:30. We're talking about, this is a monthly figure as well. We're talking about just perhaps a small deviation on these slightly higher numbers, but these are the things that are kind of concerning the Fed. The fact that inflation is clearly ticking higher. They're not too sure, I suppose, why the bond markets are doing what they're doing, which is we're down at these excessive lows. Even though the Fed have said they'll be increasing interest rates, they'll be tapering their massive bond buying program, and yet the bonds still tick lower. So, and that's probably only likely to continue from what we see and what we understand. So what does this mean for some of our trading opportunities? Well, last night we discussed these 4 plus the crude oil market. So we're already in our euro dollar trade to the upside, so we're going to look to keep this trade. You can see the more recent price action. We do get these sort of significant flush trades to the downside, so we very well may see that again, but our bias is clearly to the upside. If you look at it on the daily time frame, what we're looking to do is to trade out of this If I just get up our pen. Sorry, just bear with me a second. What we're anticipating is really trading out of this little sort of bearish range, and that's what this price action indicates, that we very well may get some extended moves to the upside. Today's market conditions, after a pretty eventful week really, is a little bit of calm, a little bit of indecision, so we shouldn't be too surprised about that. So what else were we looking at? The dollar Swiss to the downside. Again, it's a mirror image of the euro dollar. It's just inverted. So our bias would be to the downside below that 90.51 level. You do have a nice concise 90.75 stop loss. So it could be a 25 pip trade to the downside if we get these markets rolling further lower. It doesn't really look like that's the case so far. We've got this indecision across most of these markets. The pound dollar is just sort of hesitating. Bit of a recovery trade really in the dollar yen. It's not that we're not seeing that much volatility in it. There's your indecision in the dollar Swiss. The dollar CAD, which we also like further to the downside, is having a little bit of a pause. The Aussie dollar, we're seeing the dollar just begin to strengthen now today, just reversing yesterday's highs. We spoke about the last couple of days that the Australian economy and their central bank are looking to remain, or to keep accommodation as is, and looking to hold rates lower for longer, and that's always going to put a little bit of downside pressure on the Aussie, and we're only beginning to see that kick in today. Similar situation for the New Zealand dollar. The euro pound, it's just drifting sideways in this phase. The pound yen, continuing its move to the upside. We're just going to do a little review of all of these because some of them are, we've got a few question marks on many of these markets in terms of direction. Our bias would be to the upside in gold above the 1833. This was another trade that we were looking at yesterday evening. Crude oil, we do like this market above yesterday's high, which is a 73.39. It's just procrastinating at that level. So we've seen a bit of a move to the downside now in the S&P, in the US stock market. But what we can safely say over the course of this week is that we've been trading a very, very tight range. So whether you're a bull or a bear, you can't really do an awful lot with this type of price action. So what we're looking for is a breakout to the downside below the 43.72, or perhaps a breakout to the upside above the 44.30 level. So there's about I suppose a 60-point range that this market has just been drifting up and down. Similar situation with the Nasdaq, Dow Jones, indecision up at those very significant highs, and we're seeing a rollover to the downside in the FTSE. The DAX is a bit indecisive just yet, and a bit of further downward pressure in the Nikkei. Bitcoin is also feeling the pressure now. So what we have in Bitcoin is, we've been talking about it for quite a while, but a clearly defined range between that 41,000 and the 29,000, and now we're bouncing off these highs again. So we would expect a bit of short-term selling pressure coming into these markets from these levels, and it looks like it's going to happen again. So let's see what happens. If we do break out above that 41,000, we'd expect Bitcoin higher. If not, we probably expect prices to be coming back down to the 30,000 levels. So one to watch, of course. So where are the opportunities? That's the key question in today's market. Right now, we don't really have many to work off. We could do if the stock market starts selling off a little bit further. Our trades from last night. Our trades from last night are really around this dollar weakness trade. So the euro dollar to the upside, the dollar CAD to the downside, and the dollar Swiss to the downside earlier. And you can see all of those markets are literally not doing anything just yet. So we just need to be a little bit patient. Gold market, as you can see, it's hesitating. Will it react again to the potential inflation story? It's probably likely to, with a bit of further upside pressure on this. We think we are going to pack up a little bit earlier today. We've just seen reversal sort of trades really over the course of the morning session. Will we get continuation now? We might get a little bit of further dollar weakness. Is it worth trading? By the time we get the move, probably not. So I think we're going to call it a day early. It's been a long week, but we do expect the euro dollar to push higher, the dollar Swiss to push lower. So you can look for those opportunities. Dollar CAD to push lower as well, and gold potentially above that 1833 level. But I suppose with these markets, no need to kind of force trades. There's no need to push them too hard. So we might give it a little bit of time off screen, but we will probably be packing up early, I would imagine, and enjoy the weekend. Just to let you guys know as well that we're taking a few weeks off now from next week onwards for our summer holidays. So we're going to take a complete break from these markets. We are strong advocates of taking a bit of a break. So we will, of course, notify you when we go live. So if you want to subscribe to the channel, please do, and we'll certainly be in touch with you in a couple of weeks. And we've got some really exciting products and services in the pipeline, which we'll be announcing in September. Just for those of you that just want that extra contact on a daily basis, we'll be able to now provide that for you properly, and revert back to some of the products and services we were able to offer pre-COVID. That seemed to really impact us quite significantly. So with all of this in mind, we're looking forward to having a little bit of a break now in August, and we'll be back with all guns blazing from September onwards. So on that note, these are the markets in which we're looking at. So you can keep an eye on them if you are still looking for that trade over the course of the session. But we will probably be packing up pretty soon and see what opportunities we'll get. We might get a further move. It's going to be a tough one. There's clearly a lack of sort of direction and momentum in these markets. So it just depends whether that continues or not. So look, on that note, we'll let you guys go. Have a lovely weekend, whatever you're doing. And we look forward to seeing you when we get back from our summer break. So from everyone here at the Live Trade Room, take care, and we shall speak to you soon. Bye for now.